In collaboration with AB Capital Securities Inc., Global Strategy Real Estate presents to you the weekly stock market wrap-up, posting every Friday of every week.
では、今週も、AB 証券とのですね、生ライブ対談始めていきたいと思います。本日もですね、まず初めての方もいるかもしれませんので、このライブはですね、週1回ストックマスターズの会員様向けに、実際に AB キャピタルの現地アナリストをお呼びして、皆さんの、クエスチョンですねに実際に答えていくこの Q&A セッションが前半に来ます。で、これはですね、日本語の解説もつけて今ここで生ライブ中に解説をします。で、後半がですね、毎週ウィークリーラップアップという形で、今週のマーケットの情報から各個別銘柄のですね、現状、それからどんな注目銘柄が今あるのかといったような週のマーケットの、総括をしていきます。で、ここがですね、後半の部分はすべて英語のやり取りになってしまいますので、もし英語がちょっと厳しいという方はですね、ご心配なく後日に私たちが日本語のスクリプトもつけて、また動画の方をですね、配信しますので、そちらで確認することもできます。ではですね、早速前半の Q&A セッションの方から始めていきたいと思うんですけれども、まずその前に今回参加しているメンバーが、日本側が、私、松下と、家村と、弊社のフィリピン側のスタッフとしてステファニーで、AB キャピタル、現地アナリストとしてレクスターさん、ランスさんに、参加してもらってます。ではですね、早速 Q&A の方から始めていきたいと思います。今週いただいた質問がですね、DITO の現状についてアップデートしてほしいということで、この中にいる方、DITO という名前聞いたことある方多いと思うんですけれども、非常に今通信会社ですねとして、注目されてます。で、去年から2020年からの株価の伸びも非常に上昇していて、でただ今年に入ってまたガクンと落ちてというような状況で、かなりですね、今、皆さん聞きたい部分かと思いますので、ここの、DITO の現状を実際に、まず聞いていきたいと思います。ではですね、家村さん、お願いいたします。ということで、今週のですね、Q&A 一応これで以上になりますので、こういった形で毎週皆さんの質問に対して何でも回答していきますので、ぜひですね、見ている方は質問がありましたら、またストックマスターズの LINE の方で、質問を私たちに投げてください。で、またこういった形で非常にですね、現地のプロの情報を生でゲットできるっていう非常に貴重な機会にもなりますので、周りの方、ぜひ誘っていただいて、皆さんで盛り上げていければと思います。ではですね、今週の Q&A はここで以上とさせていただきまして、後半、早速ウィークリーラップアップに入っていきたいと思います。Stephanie, let's get started weekly wrap up.
Hello, everyone, and welcome back to the weekly stock market wrap-up with AB Capital Securities Inc. Today, we have Mr. Lance to give us this week's stock market report.
Hi, everyone, and welcome to this week's market wrap. Okay, so first off, for the U.S. markets, what moved the major averages last week was first the Fed keeping a dovish stance. So the Dow Jones broke above the 33,000 level for the first time ever, as the Fed stated that there is unlikely a rate hike until the U.S. economy achieves full recovery, despite expectations of faster inflation and stronger economic recovery as well. However, sentiment was kind of tempered as given concerns over surging yields. So the 10-year Treasury yield broke above the 1.75% level last week, which was the highest level since January 2020. while the 30-year Treasury yield broke above the 2.5% for the first time since August 2019. And for the Philippines, some economic news: NADA-Bax curfew, localized lockdowns. Oil remittances is down for the second straight month in January. Philippine firms' gross revenues fall 20.4% in the fourth quarter of last year. And construction starts in 4Q 2020 fall on weak confidence. So basically what that tells you is that there's still no strong indicators that the Philippine economy will have a robust recovery. And for some corporate news, government finalizing details of new deal with MWC, AREIT to inject 15.5 billion worth of commercial property assets. So that will help ensure a 6% dividend yield for AREIT at 32 pesos per share. Prime Media Holdings signs MOU for casino license. So Prime Media is looking to focus on the hotel and leisure side of the business. SM boards approved to increase its stake in Go from 30.49% to at least a majority of the outstanding voting capital stock. So SM has offered or did a tender offer of Go shares at 8.50 pesos per share. And finally, out of the 24 index issues that released full year results, 13 were behind, 8 were ahead, and 3 were in line full year consensus earnings estimate. So on a week-on-week basis, the index is down 293 points, mainly as COVID-19 cases continue to spike here in the Philippines, and also as positivity rate continues to increase as well. Oh, sorry. So for last week, net foreign selling accumulated with 3 billion pesos. So that's 5 straight weeks of net foreign selling. And on a year-to-date basis, net outflows accumulated to 28.5 billion pesos. And our outlook for this one is still the same. We continue to expect net foreign selling to persist most of the days, given that, as I've mentioned, we're seeing increasing number of COVID cases. For the past 11 days, it averaged around 5,900 cases per day. In terms of active cases, we're on our way to hit a record high since the pandemic began, which is over 83,000 active cases. And on top of that, several hospitals have already been reporting that they're at full capacity. In fact, for Metro Manila, over 70% of the ICU beds that are allocated for COVID-19 patients are already occupied. And in terms of vaccine rollout, it's not really been that fast so far. Just about a little over 300,000 have been vaccinated so far, equivalent to about 0.30% of the country's population. And in terms of the vaccine that the country have received so far, it's just a little over 1 million, which is just equivalent to about 1% of the country's population. So having said that, with prospects of economic recovery not looking that good, year to date, the Philippine stock market is among the worst performing markets in the region, down 9.9%. And in terms of PE, so the average PE of the countries in this slide is at 17.6 times. So the Philippine stock market is at par right now. Comparing it to its 5-year historical average, the 5-year historical average PE of the PSE index is at around 18 times PE. So it's 17.6. We're at a slight discount. However, for our market outlook, we continue to expect to see further weakness in the index, given the lack of positive catalysts. Again, there's just much more negative news flow. As I've mentioned, the increasing number of COVID cases have led to the government putting the Greater Manila area under a stricter GCQ from March 22 until April 4. So given that, our support levels are at 6,400 and at 6,200 for now. So some key events: DDMP listing will be on March 24, BSP meeting will be on March 25, and if the president will not veto or sign CREATE, it will lapse into law by March 27. So again, CREATE bill looks to immediately cut the corporate income tax from 30% down to just 25%. And for our stock picks, it's still the same. We again updated the figures. So for the dividend play, these are the companies that have relatively resilient earnings amidst the pandemic. And our picks are Tel, Globe, and Meralco since they give high dividend yields for 2021 expected. And for the value play, we pick the companies that have price to book of less than 1, indicating that they are a good value play. So our picks are Metro Bank, Security Bank, GT Cap, NPI, LTG, and TMC. And we've included resistance and support levels to aid you with your trading. And finally, again, the companies in the negative territory are the companies trading at a discount versus their 10-year average PE. And the companies trading or in the positive territory are the companies trading at a premium versus their 10-year average PE. And that's it for this week's market wrap.
Thank you, Ran-san. I have several questions. Firstly, could you tell me the major contents of the Create? You said corporate tax rate reduce from 30 to 25%.
Yes, that's right. Then essentially, Create is just essentially lowering the corporate income tax rate. What was initially proposed was a gradual reduction in corporate taxes, but because of COVID, they had to recalibrate the Create bill. So going straight from 30% all the way down to 25%.
So 25% start from this year, 2020, 2021?
This year.
This year, 2021.
Yes.
Okay. Thank you. So the major contents of the Create is tax reduction, corporate tax reduction.
So currently, last year it was 30%. So what will happen is 25% will be this year, and then a 1% reduction for the succeeding years.
Year by year.
Yeah. So the end goal is to bring down corporate taxes to 20% by 2027.
20% 2027. Okay. I see. Thank you. And okay, I want to ask you regarding the interest rate. The U.S. Treasury bond yield is going up, but Fed still keep the dovish stance. So what the interest rate movement and policy movement of Philippines? And also, I want to ask you, most of the Philippine company have a bank loan, U.S. dollar basis or peso basis?
Yes, that's right. Well, our view is that of course, with the expectation that the U.S. may hike interest rates, so that would definitely put some pressure to the Philippine peso. So, especially that BSP stance right now is more on a pro growth stance. They in fact they lowered borrowing rates by as much as more than 200 basis points in order to address the slowdown that we're seeing right now. So we don't expect BSP to increase its benchmark rates for this year. Most likely, it will be maintained for the remainder of the year to support the growth. And I think what's the problem? The problem right now is really not the demand side, but more on the supply side. So I think increasing the rates for the Philippines is most likely not the solution. Of course, with lots of restrictions, I mean, goods are having a hard time moving from point A to point B. So I think that's what's really driving inflation right now. Overall, we expect a weakening of the peso. That should be good for exporters and for OFWs and even BPOs, making them more competitive. But again, there's also the risk of I guess financial risk on the government side. Some of the borrowings are of course foreign denominated as well, but I wouldn't say it's a big portion of the total pie.
Okay, okay. I heard in Indonesia, Indonesian's company loan mostly. I think I heard 80% of the loan US dollar basis. So, but the Philippines not like that.
I think the new I think most of the new borrowings are foreign denominated, but as a percentage of the total standing loans of the Philippines, I think it's about half and half.
Half Filipino
of the
peso, half the US dollar.
Foreign, not necessarily US dollars, but some are US denominated, some are Japanese yen denominated.
Okay.
Chinese, yeah. So I think foreign denominated debt in general.
From the borrowing side point of view, higher peso is better for the borrower.
Well, it really depends. If you have foreign denominated debt, then that would be negative for you. But right now, I think the government has managed a way to balance their borrowings. It is expected already that the borrowings would be significant. They were able to secure lots of funds from ADB, World Bank, and even IMF to fund the vaccine program, and most of it are actually dollar denominated. So that would really add pressure on the local currency. But I guess overall, we expect a weakening of the peso, probably back to the 50 level in the medium term.
I see. Thank you. Okay, I want to ask you the specific questions. Firstly, SM Prime Holdings increased their stakehold for 2GO. 2GO is this is a logistic company, right? 2GO.
Yes, that's right.
Yeah. I think one of the positive factor for the logistic company is delivering the vaccine. So,
yes, that's right.
Overall, what the overall management situation of 2GO, and also this SM Prime's stakeholding increase is good for 2GO or good for 2GO stock price? What the impact for the stock price for 2GO?
Yeah, well, the story behind it is that of course everyone was betting on the logistics space, especially with the vaccine transportation. Although the management of the Go hasn't turned around the business. In fact, there's even reporting at a net loss for this year. The hope is that with a better management of SM, hopefully they can turn around this business. It's not just it's actually more on synergies on SM's part, especially with the entry of IKEA. So I think that would be an added boost also on their whole business segment. The vaccine would be an added bonus to them. SM is more into retail as well, so I think that would be beneficial for them. I don't see any major contribution yet for to go in the total business side of SM. But hopefully with the takeover of SM, they could turn around the business. I think on the side of Chelsea, the reason why they liquidated this is essentially because of high debt obligations. They have to. Dennis Oye is at the risk of defaulting from some of its companies, so he had to lighten up some of its holdings. He has huge debt obligations with BDO and with the government, including DBP, Land Bank. Essentially at the risk of a default, so he was forced to sell his stake in To Go, and we expect more companies. In fact, he even made a statement that he plans to reduce further his stake in Phoenix Petroleum, so just to ease the debt burden on his end.
So basically, 2GO could get more business from SM retail businesses.
Yes, that's right.
So basically, in a whole perspective, this transaction, this deal, could be good impact for 2GO, and it is a follow win for the 2GO stock price.
Yes, it should be good for them, especially also with the growth of the e-commerce. So I think that would be beneficial. I think if you're talking about the stock specifically, it's not as liquid. I think daily turnover is less than 1 million pesos a day, so it's really hard to get a big chunk. I think the float would be around, I would say, 20% or probably even smaller. So that's why we're not seeing as big in terms of daily trading for to-go. But I would put 850 as the benchmark if you wanna get a little position on that. Especially that SM bought the remaining shares at 850. I believe the first tranche was even at 1850 or even 20 pesos per share. So I would say SM's average price would somewhere be within the ranges of 14 to 16 pesos per share. So the concern right now of to-go is really liquidity. It's not as traded as other listed companies.
Oh, I see. Thank you. Okay. Okay. Final question is current interest rate situation is the following to the banking sector.
Sorry, can you repeat that?
Oh, meaning that interest rate is gonna be higher, even slightly. This should be the good for banking businesses, I think. What do you think about it?
I think if you're talking about on a global scale, I think that's the outlook. Higher interest rates for the rest of the world. Unfortunately for the Philippines, it's a different story.
Oh, really?
So,
okay. Very interesting.
Since BSP might have a hard time increasing benchmark rates, especially that they're pushing for growth for this year. So if you increase the interest rates, then that would be detrimental to your growth story. And as mentioned earlier, it's really the inflation right now in the Philippines is supply driven. It's not demand driven. So even if you increase your benchmark rates here in the Philippines, that wouldn't really address the high inflation story. So my opinion, I think the BSP would probably maintain rates for this year. Yeah, at most maintain rates.
So this current BSP policy is neutral for the banking sector, BPI, BDO.
Well, if global central banks are increasing its benchmark rates, then that would put pressure on the peso. So we expect the peso actually to weaken in the medium term, probably but closer back to the 50 level.
Okay. Thank you, Lexer-san. That's all my question.
Thank you, Mr. Lance, Mr. Lexer, Yumura-san, and Matsushita-san for joining us today. And that is it for our weekly stock market wrap-up with AB Capital Securities Inc. Thank you, and see you again next week.